session today was to be one of the highlights of our annual Credit Matters conference, which this year was to be in Krakow, Poland. But as with most everybody else, it's now fallen prey to the COVID situation. This is our first opportunity to celebrate our name change from the Association of Credit for Central and Eastern Europe to Callisto Grand. For those of you that are new to our organization, we're all about delivering best practice in order to cash through training, coaching, mentoring, analytics, and indeed podcasts. The technology that is available today in our area is delivering predictive analytics and dashboards, coordinating the big data that we manage. And it's, as you'll see over the next hour or so, the level of expertise, the technology, and the potential is absolutely extraordinary these days. However, the technology can, the benefits of the technology can only really be reaped dependent on the talent working with it. And as we'll talk later, upskilling the O2C teams to make full use of the technology must also form part of the budgets and the planning going forward from here. Having worked in operational order to cash for close on 40 years, it's my observation that our time has finally arrived, that no more will our area be labeled back office or a niche or a necessary evil or something like that. We are the guardians of trade receivables, every organization's largest and most complex current asset. And one of the most common phrases that you're hearing today is that cash is king, and the technology supporting that is very much key to cash being king, and for us to be able to safeguard that precious asset. The panelists from HighRadius, Sorala, Order to Cash, and Remilia will shortly introduce themselves, but it's my great pleasure to hand over to your moderator for this afternoon, Mr. Tom Bangerman from the Hackett Group. So over to you, Tom.
Thank you, Mark. So as Mark mentioned, I have done this before. Also last year, we actually sat together physically. It was much easier around to do it physically. You could see what people were saying and doing, and if they wanted to sort of add something. So we're trying to do this now virtually, and so my main job here today is actually to distribute speaking slots, which is a fairly simple task, right? Mark, I realized that you had 40 years of experience, so you're actually older than 45, right?
Just a smidgen, I'm afraid.
Yeah.
So. Yes.
Okay.
Yeah. I lied all these years. I lied. I'm sorry.
Yeah, I just discovered that, but thanks for that. All right. So without further ado, I'll just start distributing speaking slots. And why don't we start, Frank, with you, since you have the sort of highest title in the round. So why don't you give us a short intro to yourself and Order to Cash?
Yeah, thanks, Tom. Yeah, my name is Frank Hoekstra, and I'm the CEO of Order to Cash. Funny that I'm the only CEO here, but I probably that has to do with that Order to Cash is around for almost 20 years, focusing on the accounts receivable automation. So as the rest of the group, of course, but. Let's say until so far we haven't. Order to Cash is a Dutch company. We are working globally, have many offices around the globe, and until so far we are financing our growth ourselves. So that means that within our company, cash is king as well, and. Yeah, let's say that gives a different pressure, I think, than the rest of the vendors. But that being said, my background is I started working within Pricewaterhouse, being an auditor. Did some sales for a CRM company in Europe, setting up several offices in the Northern Europe region. And since 18 years, I became the CEO, and since 14 years, the owner of Order to Cash, together with my partner Marco Eeman, who's the CTO of the company. So far, Tom.
All right, great. Thanks, Frank. I'll just move on the screen to John. You are the next sort of window on my screen, so why don't we continue with you and High Radius, please?
Yeah, thank you, Tom, and good morning, good afternoon, good evening, everybody, and thank you for the opportunity to meet with you all today. So, as Tom said, my name is John Keating. I'm responsible for Europe, Middle East, and Africa for High Radius. We're a global firm with significant presence now in Europe and also in Asia. We work with all types of companies, all sizes. In particular focus, we have over 200 customers who are in the Fortune 1000. We're entirely a SaaS company, so all our products and solutions are delivered in the cloud. And we leverage artificial intelligence and autonomous-based solutions to help our customers automate their accounts receivables and treasury processes. I'll leave everything else till later on, but looking forward to the discussion.
Okay, super. Brian, I'll just move on to you because you look to be the next screen on my laptop here. Brian Morgan.
Thanks, Tom. Thank you, everyone. My name's Brian Morgan. I'm the Product Marketing Director at Remilia. I'm standing in today for Kevin Kimber, our CEO, who unfortunately cannot make it. I joined Remilia 4 years ago. Previous to that, I was a customer and advocate of the Remilia solutions. 25 years experienced credit manager using technology to leverage improvements in results and efficiency, which culminated in the Chartered Institute of Credit Management in the UK, designating Veolia, the company I work for, as a centre of excellence. Working with our existing customers at Remilia and prospects, and providing advisory and consultancy to them in how to leverage our technology.
Yeah, thank you, Brian. And Brian, you were also in last year's discussion round, right? So I'm assuming that means that it's not going to get too bad since you have returned to try to do this again. Thanks for that. Marco, last but not least, you seem to be the most sporty of us because you have the challenge of actually standing there for all this time, right?
That's one thing, and I stand in for CEO Sven, who apologized. I don't know exactly why he could not make it, but I was actually 3 hours around. Around 3 hours ago, I was asked to fill in here because I'm also in the headquarter in Hamburg, Germany. Our headquarter, and you see we have a TV studio already. So what I'm doing at Serala is I'm responsible for solution architecture, which basically is pre-sales and solution, being the solution experts globally. With a team of 25 people, we actually consult and design solutions for different customers. Serala is a company with around 750 employees these days. So headquartered in Germany, but we have a big presence also in North America as well as globally with partners and local offices. Our portfolio is a little different to the other vendors because, of course, we claim to be one of the big ones in the order-to-cash area with hundreds of customers. But we also cover P2P, treasury, cash visibility. And this is a little differentiator, which is also beneficial when we talk to customers because we understand the full end-to-end finance chain and cover the full portfolio, which is required also by customers. But of course, we talk about it later as well.
Great, thank you. Marco, since you're already speaking, can I start with you with the first question? I realize some people are keen to speak about COVID and some people just don't want to hear it anymore, right? But I guess we do need to cover some of it, and we thought we'll just kick off with some questions around that. And I mean, how have you been the last 6 months, and how has Serala been? And in relationship with the business you're in, I mean, is business actually good in crisis times for you, or is it bad? Or how does it look with this environment?
I mean, overall, we've been sent to home office around 6 months ago when it already started. Since then, I worked from home, which I personally appreciated a lot because my fiancée was pregnant. She gave birth to her daughter 2 weeks ago. So we could prepare at home. That was good, more flexibility. I traveled less. As you can imagine, all of us, we travel quite a lot, I think. So of course, this changed now. And now you see me standing in a virtual office. I mean, not really virtual, it's a physical office, which we build up for our digital sessions, virtual sessions. You see the other ones also having roll-ups, virtual backgrounds. All of that stuff, of course, we are having now as well, because we still want to create a good impression when talking to externals, customers, prospects. So overall, as a company, I would say we're getting through this crisis pretty smooth and pretty well. One reason basically is, that's pretty clear, we switched our business model as Serala from perpetual license to subscription, and we heavily invested in also cloud solutions and cloud approaches, software as a service. In the past, our company was rather known for on-premise solutions, mainly also driven by SAP. We were mainly working with SAP customers. This changed now. So basically, if you ask me, are we doing okay within the crisis? Yes, we do. One reason is, very frankly, that we start invoicing people in the subscription world already end of last year. They pay, and then the crisis breaks out in February, March. So most of the customers already paid for the remaining year. And I think it's very similar to the other vendors who are all subscription companies, as far as I'm aware.
And how is the pipeline? I mean, is there some impact from this crisis? I mean, since you're working sort of on the basis of what happened to some extent previously, that's understandable. But how does the future look based on new activity and new interested parties?
Yeah, I mean, we just, you can imagine, we have also executive meetings, management meetings, sales meetings. These just took place the last 2 days for EMEA, Americas, so the DACH region, the German-speaking region. And the pipeline is looking very healthy, very good. But I think everybody's facing that people don't take quick decisions, and things are being delayed and postponed. That's also something we're suffering with. So overall, we feel and we see that there's much demand in the market. People still request our solutions. They look for implementations of automated or workflows. They look for analytics. They look for deeper insights into data, basically. But I can, of course, say very, very honestly that we are not reaching our goals for 2020 as maybe we anticipated in January of 2020. We're doing pretty fine. We're doing okay. But like every vendor, of course, we feel the impact of this crisis. And still in some regions, since we're a global company, it's a little tougher than in others. So in the German-speaking market, I can say it works rather good already. In the US, I mean, I don't know if to tell you, we're still struggling. But every company is struggling there. Everybody telling you something else is probably not telling you the truth, because there's some uncertainty we're all seeing, not only in software selling, not only in the solution selling, but also beyond.
Okay, so I'll just work the order backwards now and move to you, Brian. Are you saying something else, or is it a similar situation for you? And how was the last 6 months?
Yeah, I think I think COVID has created lots of opportunities, Tom, both for our organisation and for customers. It's been challenging. Like Marco says, anybody who says anything different, I kind of not 100% believe them. But I think it's how you respond to the challenges. And I think for us, we are seeing customers coming back to us, or prospects coming back to us, because I think one of the things that COVID has done has actually raised the need and necessity for resilience in processing. And I think, probably before COVID, people were accepting and going along doing what they've always done. And I think that we've seen a massive, our customers are showing us that they've been able to allocate payments from their home office and have the resilience in that process is important. And organisations, that have not got that process automated, are seeing the challenge of not being able to do it, but also the opportunity of making that change. And I think shareholders and stakeholders in organisations are looking for organisations to demonstrate how they're going to be resilient. If there's a second wave of the pandemic, the next, whatever the next black swan is, the impact of Brexit in 2021, how are people going to be resilient rather than just going on the crest of the wave that perhaps organisations have been over the last few years. So for us, I think that there's a massive opportunity that is awaits. I think, we've talked about it before, Tom, that people have talked about finance for transformation. set out plans, but actually the delivery of financial transformation has been slow. And I think COVID is actually focusing organisations' minds that this finance transformation is not something that's on the back burner, but has come to the front. And I think that's creating opportunities for organisations like ourselves today.
Yeah, thanks, Brian. John, how's your last 6 months been?
Yeah, I mean, I think as Brian and Marco said, not surprising, it's a challenging environment for everybody, both business and personally. I think that first sort of 6-8 weeks post-lockdown was probably the hardest because everybody was in a sort of contingency planning mode and didn't really want to talk about projects. But I think what we saw is as people completed their contingency planning, worked out what that meant for their revised business plans and what that meant in terms of their priority projects, what we saw coming out of that was it was a huge uplift in terms of the number of companies who wanted to talk to us and with a degree of urgency. And that was really, I think we saw two primary things. One was that obviously working capital and cash management was even more critical than it had been before and went right up the list in terms of priorities for just about every company, whether struggling or actually benefiting from the crisis. And secondly, the benefits of automation, particularly as people were forced into working more remotely, then being able to use agile technologies to support that, so cloud-based solutions, actually again went right up the priority list. So I think our biggest challenge actually when we came into it was that we thought our enterprise customers, we'd always sold to and then run projects with a heavy face-to-face engagement model. And so I think the concern was actually, would we be able to run all the processes, so sales, implementation, customer value, remotely? And we'd never done that before. Now, fortunately, all our products are delivered in the cloud, so technically we don't need to go on site. But I think what's really pleased us has been the fact that the customers, of course, have been in the same situation and been very responsive. And in fact, what we're seeing now is, I mean, our pipeline is the biggest it's ever been. And we fully expect, given the demand in the marketplace, to have a really excellent year. And I think that's just a reflection of the increase in priority of some of the things you talked about, or Mark talked about earlier on, in terms of automation and order to cash going up the priority list.
Yeah, that's interesting that you say that your pipeline is bigger. That means you have also found new customers, right? Because, I mean, I tend to think it's quite difficult in these circumstances to come up with new connections, new contacts, new customers. Sort of the old networks and the old pipeline that you have to work it off remotely sort of works, but to meet new people and come up with new contacts, how did you do that?
So we invest a lot in marketing. We invest a lot in products as well, but we invested a lot in marketing to drive engagement with prospects. So I would say that existing customers are obviously a very important source of expansion of the programs we have with them. But in excess of half that pipeline is new customers, new prospects who now have, in some cases, more urgent requirements than they had previously. And some of the business that actually we were able to, fortunate enough to get signed with customers in the Q2 was with new customers reflecting their priorities. And actually what we were seeing was that probably what we saw was perhaps 20% of projects being approved in enterprise companies. But actually, if you were able to position the value you could bring in terms of automation and benefits to working capital, then our projects were one of those 20% and we're getting signed off still. So, I mean, we're obviously very grateful for that. And I think, as Mark said earlier on, I really think that this whole order to cash space, in terms of the willingness to embrace automation and the benefits of automation, has been accelerated by the impact of COVID and people having to work remotely.
Okay, thank you. Frank, what's your view?
Let's say it's a strange world at the moment, if you used to work from home from the office, at most of all the people, then suddenly you have to work from home. That's completely different. Although we all are on a software company and we have the heavy work in between different locations. So all the tools are there. So actually the change was really was fairly easy, so that was not a really big problem. But you have to you contact your customer or your potential customer on a different way. People are salespeople are used to travel directly to visit customers or potential customers. Now they just make them aware that they can make use of WebEx, Teams, Google Hangouts, whatever. So the good thing is that in the last 6 months, all the companies know how these tools are working. So I think in the future, I think more business will go online instead of just having a physical meeting at the customer site. So if you just look to our business, we are mainly transaction driven. So our business model is transaction based, and we definitely have a few customers who really suffered from the COVID. So really large corporates probably have all read them in the news. A few of them where let's say the revenue fell down to more than 90%. So that means that from a revenue perspective on our side, that much less transactions. So that means also less revenue within the company. On the other side, there are customers who said, okay, this is we definitely see the benefit of your platform in certain countries or certain business units. And now we speed up the rollout to other countries. So that's also what we have seen. And from the sales perspective, we have won new logos without having a physical meeting. So that's also quite new, So and interesting how it goes, So that means sales process, contract signing, and even starting up the project. All online. So and that's the good point of the COVID as well. I think the adoption of working remote is going that pace that I think we all benefit of it. So I think a lot of good things. And maybe the last thing Ray just mentioned already, a really good pipeline, and that counts for us as well. I definitely can say that the pipeline has never been as good as it is today. I definitely believe the future looks really bright. So let's see.
Thanks, Frank. Yeah, I mean,
Tom, can I?
Sure, please go ahead.
If you're going to ask a follow-on to Frank, go ahead. Well, I didn't mean to interrupt you, Karen.
No, go ahead, John.
There was another couple of data points, which I think also an indication of the importance that customers are placing on order to cash and automation is, like everybody else, of course, one of the things we were concerned about was customers potentially cancelling contracts and deciding that, when they were evaluating where they were going to spend, that this wasn't an area, or indeed stopping projects that were in flight. And in fact, we actually saw less churn in either of those than we would just see in normal course of business. And I think what that indicates to me is, again, that the whole order to cash area was seen as being significantly important to companies, that it wasn't an area they were prepared to cut costs in because they saw the value in terms of managing cash. So I think that's another data point in terms of just reinforcing that sense of, this is an important area, increasingly important, probably more important than it's ever been for the companies that we talk to.
Yeah, and that's exactly sort of the direction I wanted to go with my follow-up. I'm not surprised about your answers in some. I mean, if we look at what we sort of saw in all of our clients and research that we carry out, initially in this crisis, obviously, as Mark hinted, cash was king, and it was to about 20% of all companies. It was the only thing that they were interested in, quite frankly, because it was about survival. For some others, it might have been business as usual or slightly better or slightly worse. But for some, it was actually about survival. So it's clear that cash must have been the number one topic at that point in time. So it would be surprising if, you know, in this round, you would not give mainly positive responses. It would really be surprising. The other thing I was interested in, Brian, you mentioned that you can move certain activities and do them from home, and that reminded me of the fact that what has happened through this crisis, for example, is that there's been a lot of issues with cybersecurity and data security, and we had some clients that had problems with that because when they moved work from office to home, especially if they were saying in a business where they were doing outsourcing or dealing with client data, it was a little bit difficult because maybe all policies that were in place were not fully followed in that kind of process environment. So is this and I also read that during the crisis, hacking into companies has increased threefold, and it was already on a fairly high level before. We just don't read it because nobody advertises it, right? But is this something that is also becoming a topic for you in terms of your clients and your products? Is anybody interested in answering? Just Brian, do you want to comment on it? Because you sort of...
Yeah, I'll take the lead on that one,
Good.
Tom. To be honest, the answer is that we've not had an issue with any of our customers. With our platform being on Microsoft Azure, SOC compliant, and all the ISO 9001, 27001 issues, I think it is important. Compliance has obviously become important over the years and will remain important. I think having those policies and procedures in place is a strong indication for, you know, the global companies that we're working with, that's part of the procurement process, right? So, you know, the proof is in the pudding, I suppose, in the fact that we've had none of those issues from a Remilia perspective or with our customers.
Okay, that's good to hear. Anybody who wants to add something? Frank? Frank?
So what we see is basically, of course, a high demand in answering IT and security questionnaires. There's no doubt about that. I mean, I said we have many more leads, many more opportunities right now, which hopefully convert also into business. In the end, I'm half a consultant, half a sales. By heart, I support sales with a consulting background, so I'm a little bit more conservative. I don't know whether all of the pipeline in the end also converts into real success, but very likely it does, right? But in the end, what we see is we also acquired a few companies over the past years, and of course, all these companies had their own infrastructure, their own IT environment. So we already heavily invested over the last years, luckily, into security compliance. There's security officers, the certifications like ISO 27001, Brian just mentioned. And in the end, right now, this is very important, helping us because the request from customers to justify and to prove that you are secure is really increasing. With more opportunities, we also have much more workload, which is positive in doing all of that.
Okay, good. Frank, you wanted to also add something?
Yeah, let's say if you work with transactional and financial data like we all do, I think security is paramount. It's a key topic. You know, let's say we can't afford. We are now using Zoom, but in the beginning of the lockdown, you saw Zoom. It was not. That was not too safe to use it. Security issues, you know, but it really, I think they picked it up really well. But I think when you really do transactional data, financial data, then they're probably out of business easily. So the other hand is if the platform we are putting in place, I think our customers they need that they can trust our platform and the security around it. And I think what we try to do in our company that security is from we as the board, we're really committed to keep it let's say as safe as possible. That it should be really in
Yeah, and Frank, just because you were commenting, I have a follow-up. You mentioned that sales were working also online quite well. I mean, since you're the CEO, what are you going to do now with the salespeople? Do you have too many of them, or do you use different channels, or how do you see the future? I mean, it's obviously not just for you, right? But just as an example of somebody who actually needs to make a decision on that, what direction are we going with the sales activity?
I think I believe that probably still even in the future 90% will go online, and that maybe once during the whole sales cycle you will visit, or maybe you will visit the customer to give an end presentation, and probably that's about it. But at least what we are going to do is that most of the salespeople who have a lease car, for example, here in Europe, they probably don't need any anymore. So that definitely saves on that respect. And but yeah, I think we even gonna invest more in sales, because the good thing is you can reach more people, more companies within the same time frame. So so in that respect, I think we will definitely enlarge the sales team in the near future.
Okay. Anybody else who wants to comment on the salesperson topic? John?
Yeah, just 2 points there. I mean, I agree directionally with Frank that that the mix will change. I still think relationships matter, and they matter to customers, and building trust and credibility is still easier face to face. But I think the mix will change from what it was in the past. So there will still, I mean, we have requests now from customers to go and see them, and we will do that. I think that's one. The other point I just wanted to make on the cloud actually was that if you go back 5 years, and most of us have been around for that length of time, then you still had a lot of challenges persuading some companies, particularly in certain markets, that the cloud was a secure environment and could be trusted. And even though you might persuade them in the end, you tended to still have that process. I think what we're seeing today is that it's very rarely a major issue. Companies now have accepted that cloud delivery can be secure. They still want to check that you meet the security requirements they have, but it's no longer the same issue in the sales cycle. And in fact, we very rarely come across on-premise solutions now with the customers we talk to. They may have them today, but they're not looking to them in their next wave. They're looking at cloud-based solutions that give them more flexibility and agility and ability to grow.
And is there any discussion about where the data sits? Because I mean, I can confirm that our research says the same. Cloud is one of the concepts that's broadly accepted, and we don't have too many issues with that. But of course, there are people who want to know where the data actually sits physically.
I think we'd all say we're absolutely critical. And if you're operating in Europe within the EU, the data needs to reside in the EU. So yeah, I think that's a fundamental part of it, and is always a crucial part of any discussion with any customer. So we use data centers in Europe, for example. We're a US company. We have our US data centers, and then we have our EU data centers to make sure we're compliant with customers in Europe.
Okay. Good.
Quickly about the sales. I mean, I talk to sales on a daily basis, and they all actually complain they got much more work because there's more leads, there's more conversations. Partly it proves to be not really like leading to anything, but in the end, the impression is they rather work more. So I think all the vendors will increase the sales teams, but they will simply intensify digital stuff, you know, like backgrounds, but also the way you present something remotely.
Yeah. Is that the main thing that you think will stay from this pandemic, or is there something else that you see will stay or change?
So I can say at Serala, for instance, we always put a big emphasis on being on-site at conferences and conventions. So all of us, all of you saw Serala somewhere already, at least on the vendor side. And now we figured out that with all the digital stuff we're doing, we created 250% more leads in Q2. So I know that some of the other vendors were already much better in the past in digital marketing and spreading the message virtually, remotely, all of that stuff. Better websites, simply working with professional marketing tools. We did not do that in the past. Now we do, and we see big success here. For example, I have two friends, one being a pilot at Lufthansa, who, by the way, use our full order-to-cash portfolio, and one is working at Airbus. And they always ask me, Marco, you used to travel all the time. Do you still travel, or will you travel that much in the future? I said, no, for sure not. I anticipate myself traveling maybe 25% of what I traveled before. I think this will apply for the whole team, because we learn now how to use all these different tools and the new functionality. So this is not good for Airbus and not good for Lufthansa either. But in the end, also there's some industries and companies who benefit from that, right?
Yeah, I have a Lufthansa pilot who's a neighbor coming over in 2 hours. I'm not going to quote you. I don't think I want to spoil the evening, but I do agree with that view. Yeah. Any other comments on the topics we've discussed so far? No. Happy? Okay.
I think just to pick up on that point though, Tom, I think you mentioned about COVID making a difference, and I think we touched on it earlier, is that it gives, now we've got the flexibility to do either visual like we're doing today. This was supposed to be a conference in Krakow. We're doing this event virtually online. 2 weeks ago, I went to see a customer. I travelled for 2 hours, 2 hours with the customer, 2 hours back. And it does sort of focus your mind about making the most of your time, because that is obviously the scariest resource that we all have. Is whilst it was great to be in the room with the customer, you then stop to think that's 4 hours. If I was at home, working from home, that I could have done meetings, work. I made the other phone call. And I think for us, that is going to go right across all of our businesses, whether it's sales or whether that's delivering and implementing solutions. We've done a number of solutions over the years on a regular basis remotely, where we don't have to go and see a customer. Where in the past that's probably been an exception, now that's going to become the norm, because I think we've all realised that whilst having relationships and seeing people face to face is good, critical and important, it's not, we don't need to be on site all the time to deliver our solutions. And I think for all of us, certainly for Remilia, that's a big thing going forward. And I think from a customer's perspective, it does mean that we can deliver our solutions quicker, and therefore the customer's getting a quicker return on their investment and seeing the benefits from our solutions.
Yeah, I mean, we are sort of tracking what clients are saying on these topics every month. And the one thing I've learned during the last 6 months is that there's actually no topic that everybody fully agrees upon. I mean, really, no topic whatsoever. There's people whose companies are dying and others who are benefiting enormously. So there's absolutely nothing which is exactly the same. And I think also the views on, will we continue working like this, or work from home, or do sales trips and flights as before, and not. There's people who just want to go back to what it was, and there's people who are canceling all their offices, right? And then there's everybody in between. So every single solution is envisioned, and we'll see. But I'll tell you honestly, somebody who is sometimes on those events with you guys, if I'm sitting just in front of the screen here 8 hours, it's not as much fun, to be honest. So if everybody's just doing that 8 hours a day, it's very demanding, and I'm not sure the relationship part is fully fulfilled if you do this. I mean, we sort of know each other, but otherwise I don't think it really works. But I agree with you guys, there will be some sort of mix, that I'm sure. Good. I wanted to ask you also about sort of technology trends. So we know what you do, how you've been the last 6 months. there's all kinds of trends out there from, fintech, which would be interesting to ask you. Do you guys consider yourself fintech? Because I looked at your web pages, and if I read them correctly, none used the terminology fintech. There was, transforming financial management, finance process efficiency, order to cash, treasury, automation, or powered by AI. Those were some of the main things I saw. Do you consider yourselves fintech? Because you do use technologies that automate financial services to an extent, right? Anybody who says yes, or are you all saying no?
Yeah, I'll give you a response. I'm just not sure it matters. I think it's a press buzzword as much as it is anything else. You're right. We're all involved in managing financials through technology. But are we a fintech or not? We do actually describe ourselves in places on our website as a fintech. But I'm just not sure the term, other than in the media, matters too much. I'm not sure it matters very much to customers whether we're a fintech or not. I think what they're interested in is our capabilities in helping them automate their order to cash processes. So there's my controversial response.
We for sure consider ourselves a fintech because we simply provide technology optimizing financial processes at companies. So, our management, our board, we actually use this term all the time, also in external communication, and we work very closely with other fintech companies. So payment processors, when you talk about inbound payments, for instance, so payment service providers, stuff like that. So as a whole, we think that all the finance processes are covered with our portfolio, and this is why technology in this case leads to us calling ourselves a fintech company.
Frank, you want to add?
I'm not really bothered by the terminology if you're a fintech company or not. I think our let's say 5 years, 6 years ago, we changed our name from Anacron into Order to Cash. So I think that would say more, being more feasible on the internet than saying we are a fintech company. So I think it's these days, and people are working more from home. I think it's better that you're findable or searchable by all the by the big search engines, and they will find you. Then you're actually a fintech company or not. So no, I'm not bothered with it.
Okay, Brian, your view?
Yeah, I agree with the other gents. I think we'd go a step further, Tom, as well, to be honest, and say that our customers and our prospects that we're the demand that we're all talking about. I don't think they're really bothered about whether we're a fintech, an artificial intelligence company. I think what they're really bothered about is their outcomes. Cash is king. We've said that. They want to know how our organisations, like on the call today, are going to help them manage their cash, become more effective and more efficient. I don't think they're really bothered about the glossary of terms that have been bandied about for the last few years. It's more, the focus is about income, outcomes. They're really bothered about how we're going to help manage their customers and their debts. And I think that's really going to be the trend for 2021 is, are you going to help me? Not the description that's on the website or in a glossary of terms is, how are you going to help me manage my cash?
All right. Brian, if we put COVID aside for a moment, what other trends, probably technology, but if it's something else, then that's fine too. What do you think is going to impact you and your business most in the near future?
I think there's an acceptance that we're sort of the calm before the storm. Whichever country you're operating in, there's probably been more cash being collected by our customers than they expected at the beginning of the crisis. The number of insolvencies in the last 6 months have been low. And I think, everybody's predicting a 30-45% increase in insolvencies in the next 6, 9, 12 months. And I think that's going to have a major impact in the market for our customers and our prospects. And it's going to just raise the profile of managing debtors, working capital, order to cash, whatever phrase we want to use. it's going to show the importance of what credit professionals do. And I think that's going to be the real driver. And of course, at the same time, while all that risk management is needed, organisations need to increase their sales, so that you're going to have that massive conflict between risk and reward that needs managing. And I think that's going to really drive the requirements for solutions that's going to help organisations manage debtors.
Thank you. Is there any technology developments that you see are going to change the customer to cash, order to cash business, or require you to change your offerings or anything of that sort? Or are you looking at something that might be interesting in the near future?
Maybe, I mean, the biggest impact I see is actually the different payment behaviors and payment methods being used. So even in the B2B world, for sure in the B2C, I mean, if you ask yourself, how are you right now being billed from an insurance or utility company? How do you get the information? I don't want any paper anymore. So we're also in close contact with insurances, other companies. And I always tell them, listen, it's about how do payments look like in 2030. So today, it's more about, I mean, mobile-friendly information, real-time payments. You got the open banking initiatives, you got PSD2. And as we are now dealing in the out and indoor payments world, this is for us the biggest impact because people simply pay differently. And very important as well, if I say I'm now in Germany and next week I'm in Czech Republic and next week in Brazil, you see that it's a very heterogeneous payment landscape. So of course, our technology enables companies to work globally and incorporate all of that, harmonize, unify the process. But in the end, we need to accept that it's very different per country even. Also in the SEPA zone, in the European zone. Now you see request to pay coming up, for instance. Banks now driving that. We do request to pay a lot ourselves now. We acquired a company doing nothing else than that, which means you get a payment link and I want to click on the link, pay. It's real time. I don't want to be bothered also in the B2B business anymore with remittance information being detached. I don't want to be bothered with different payment methods. I just want to be informed it's paid and then somehow I get a structured file back. And this is for me, also with all our solutions, the biggest thing we're actually adapting to right now, the new behaviors, the new methods people are using. I pay PayPal all the time, and I guess you're doing too.
Frank, any additions?
Let's say, I think depends on the supply chain. If you just look to e-invoicing, for example, where of course the first of order, and then you send out an invoice. What we see is that governments and really large corporations, they have their own accounts payable portal. So if you want to do business with us, then please you have to connect and send your invoice to that accounts payable portal. So that's one thing in the large corporation, but even from a VAT perspective, especially in countries in Latin America, but also in Italy and probably more countries in the south of Europe will have their own business to government platform. So before you can send out an invoice, you have to connect and to send this invoice to the government platform, get a unique number, and then you can send it. You can do the processing of it. But it means that for these local governments, that they get more VAT through their books. So really certain countries really drive this. If you just look now that roughly 50 countries across the globe have their own business to government channel. So what I will see in the next 5 to 7 years that every month an additional country will add a new channel. So if you want to comply with these local rulings and you're an international company, then you have to connect to these platforms. So that's definitely what we are seeing as well. If you just look to payments, where Mark was mentioning too, that absolutely is effect in the US, where people are still using a check to do an B2B payment. I think we here in Europe, at least here in the Nordics, in the Netherlands, we can't even believe it. I think I wrote my last check. I think what was it? 35 years ago when I was a student and was out of money. But you know, this in Europe, the whole payment processing is much more efficient. So connecting to SEPA is definitely one thing. And the open banking standards is definitely something where we have to work with in the near future. But I think the payments matters only for certain areas of this globe.
So we have mobile and we have government or increased liberalization as some of the drivers. Yeah. Anything else, John, or would you echo that?
I mean, yeah, I think the other gentleman made some good points, and there's none there that I would disagree with. The only sort of maybe additional comments, more narrowly focused, so we're definitely seeing an opportunity through the use of technology to increase the level of automation, particularly the lower level tasks, to allow people within, whether it's shared service centers or global business services, to concentrate more on added value activities. So from a pure technology point of view, we've kind of gone through this world of, we think about RPA as being just replacing existing processes, and then artificial intelligence being enabling an individual to make better decisions with guided information. And then we're now moving into autonomous solutions, which completely take over from any need for individual input. And that frees up people's time to then start looking at some of the data that's available. And of course, there's masses more data available now in order to make better predictive decisions, both short-term and long-term. So that's where we're seeing the technologies adding value, and we're seeing companies very excited about what that can bring in terms of their ability to add value to the rest of the organization. And the second one we're seeing more of is actually companies interested in end-to-end receivable solutions rather than point solutions. I don't have the same length of experience in order to cash as the other gentleman on the call, but my experience coming into it, I was in an adjacent space, is that actually, what we're seeing now is that that there are a lot of point solutions being purchased to solve maybe for credit, and now people are realizing that actually having a single view of the data across credit, across collections, across deductions, across cash out, actually brings a lot of value to them in terms of their analytical capability. So we're seeing a lot of interest from customers from that point of view.
Yeah, very good. Due to the time limitation we have, I'd like to move to the next sort of topic, although I realize that we could talk about technology forever. But I do just state that I found it interesting that none of you mentioned RPA or robotics. Two have AI on the webpage, and two of you seem to be happy to be called fintech. So that's an interesting sort of summary for me. But I want to know something else from you, which is that if we think of the customer to cash or order to cash process, then of course much of it today is done in a shared service center within the GBS organization of a client. And when we talk with these GBS organizations, I think their primary question to us currently is, how is this operating model or service delivery model, as they typically call it in that space, looking in the future? And is something changing in it? And obviously here we only cover sort of a process of that. But if we take that as an example, have you seen, for example, in your clientele, that apart from the technology implementations they're doing, they have changed their structure, their organization, the way they deal with you, or they're telling you they want different products because they're rethinking the whole operating model? Is there something that would be visible already that would be useful for the people on the call to know from that? Anybody who wants to comment? Marco?
Yeah, for me, it's very obvious that, of course, you said you're doing shared services for a certain purpose, right? You want to centralize, harmonize, you want to gain efficiencies. And what I see is that basically with our portfolio right now and strategy, which actually we started a couple years ago already, we're on the right track because we're doing end-to-end P2P and end-to-end order to cash. And John is totally right. People want end-to-end solutions. They don't want multiple solutions in their portfolio within their environment, technically somehow supporting them. In best case, they want integrated solutions. So what we do is, for instance, when it comes to capturing data, we capture invoices and remittances with the same tool. And on the other end, of course, we understand the in and outbound process. And this is a trend we see actually increasing. I think shared service centers, global business services, whatever you want to call it, that already started a long time ago. And also back to your point, AI, ML, RPA, I'm tired of talking about that, honestly, because if we wouldn't have it, we wouldn't sell anything. For the last 5 years, I think that was really overstressed, and I wouldn't talk about this anymore.
Okay, other comments? Anybody wants to add? No?
Yeah,
Okay.
I'll be happy to add just a quick comment, and again, agree with what Marco was saying. I think one of the things we saw was, again, probably an acceleration. So when I talked about which projects were getting signed off in the current climate, we were seeing projects associated with global business services or shared service centers were amongst those being signed off. And the other thing that I think we've seen increase even in the last 2 to 3 months is interest in outsourcing, which is obviously the other half of that. So, I see definitely the dynamic in the marketplace picking up to the recognition of the added value that can be achieved by those routes, compared with potentially just buying piecemeal.
Yeah, it makes a lot of sense to me. I mean, I can just confirm from our side. I mean, obviously, the cash discussion in the beginning was key, and then we find that from all the sectors, especially in the CE countries, the one that did best really is shared service GBS. I mean, those seem to be working 90, 95, 99% of them were managing the situation quite well. And because of the cash situation, we also saw that companies who never thought about outsourcing might have been forced to do so. It was not a radical increase, but there were some extra cases based on that. So certainly exactly the same trends we're seeing. Brian, did you want to comment on this? Not that I want to force you to, but
no, I think wouldn't disagree. But I think again, there's different companies will have different strategies, and I think what some organisations are looking for is that global process, and we're seeing that. And I think you're starting to see organisations who may have a shared service centre in each of their regional locations across the globe, and they're looking to bring it into one shared service centre, and you can start to see that occurring. On the other end of the scale, I think you can see that people need to react, and they need to do something quickly, and they're looking for a rapid time to value with a solution that can be quickly installed and start solving some of their problems. And I think so. For all of us, we have to react to those two different market trends and requirements, and I think that's our challenge.
Yeah, I agree. I mean, Frank, you, for example, explained those the different channels that are popping up now that governments are putting in place. And the interesting thing is that there's companies who are very automated and can deal with these things, and then there's companies that still work a lot on paper, and also there's companies that have had a shared service center 25 years, and then there's those who don't. So we really have huge differences in maturity levels, and I guess when you four answer, everybody will hear one answer that sort of fits, and the other one is maybe too far on the left or right in terms of development. So it's quite a heterogeneous market still, isn't it?
Oh yeah, definitely is. I think it's really really interesting times. To be honest, I think accounts receivable automation was. I'm now working here almost 18 years in this space, and let's say until I would say 4 or 5 years ago, the business was only talking about accounts payable because they could save a lot of manual work in the process, and finally they start thinking about automating their accounts receivable processes, and even the shared service centers. A lot of them move to Central Europe. On one hand, of course, due to labor costs, but these days, when you have a platform connected, let's say, to all, because in most of the time the SAP is also one instance. So if you make one connection to an order-to-cash platform, then it doesn't really matter where the shared service center is based. In my opinion, I think it's just a matter of time. Especially COVID is making a real business case that. Who cares where people are working from? So having a good platform, having one ERP system, even if it's SAP or Oracle, but that's what large corporations are trying to do. And then if you connect one of our platforms to this ERP system, then they definitely have a lot of efficiency, more accurate data. The data quality, of course, is really important, and of course also the transparency. We as Order-to-Cash, we believe in once that you have one source of truth, so that everybody working on the same data. And I think if shared service centers are able to work to such a platform, work with such a platform, then I think you will see a massive change in the size of these shared service centers.
That sounds, Frank, like sort of your famous last words already. But you are right. We need to get to a close because of the time. So I would pass on to the other three gentlemen also. Can you give us sort of your outlook or what you think is going to happen, business-wise, personally, for your companies? Famous last words, whatever it is that you think we didn't cover and you would still like to share with us. Anyone who already has thought about the answer? Marco, go ahead, please.
Talking, three of us will be saying something anyway, so I'll just start now. So for me, I mean, talking about the outlook for the company, I think most successful time was after the last crisis, 2008, 2009. This was mainly driven by the fact that we had cash visibility, cash management solutions, and order-to-cash. Order-to-cash portfolio back then was not as comprehensive. So now we already talked about the demand, we talked about the number of opportunities, number of contacts we're having within companies and potential prospects. So I'm sure it's going to convert into much success. So for Serala, for a company, I'm very confident, and I think all of us are very confident that it's going to be successful. There's going to be a good market share for all of us, for all four vendors, that's for sure. We're going to compete, and competition also makes all of us better. That's going to be nice. For me personally, I hope that all of that stops at one point and we get a vaccine. Because in the end now I also want to travel again. I want to see different countries, different cultures, and still learn from the world. Because I mean, you always get better simply by traveling and meeting people. So I hope to meet all of you again as well at one point.
Brian, you agree? Anything else?
Yeah, I think interesting about Marco's comments about the last crisis. I remember my finance director at the time said to me that he wouldn't like to be in my shoes, and I thought it was actually the opportunity that I've been waiting for as a credit professional to demonstrate the value that I bring to the organisation, and that's what we did. And I think, from interesting in your comments on this, Tom, is that probably for all of us, our biggest challenge and our biggest competitor in the past has been organisations doing nothing, carrying on with their ERP, carrying on with Excel. And I think the crisis is actually creating the opportunities that we're talking around, that people realise that they need to be better guardians of their budgets and their costs, but at the same time they need to collect more cash, worry about bad debt, and so I think that will create opportunities for us all. I think we all have our own kind of path that we're going down in the next 12, 18 months with where we see the market going. And I think it's an exciting time to be in this space. I think Sonny mentioned earlier, there's been lots of spend and lots of concentration around accounts payable in the past, much to my old frustration. But for me, it's exciting being in this space and where we're, as a business, are going in our own growth and development of our products.
Okay, John, you get the famous last words now.
For better or worse. Yeah, I think, I mean, so I was just checking a couple of data points here. One was that 7 of the top 10 most valuable companies didn't exist 25 years ago. And they're all technology companies. And there was a McKinsey survey before COVID where the company leaders they surveyed, 92% said that they thought their speed of digitization wasn't fast enough to enable them to be or remain leaders. And so I think the opportunity, and that was pre-COVID, now with all the impact of COVID and all the realization of business continuity and working remotely, I just think that's accelerated even more. And because of the close association, order to cash and managing your business, protecting your business, being able to invest for growth if you're lucky enough, that actually the opportunity for everybody on the call is really to get automation in receivables up to where it should be, which is a top priority. And I think companies are seeing that. And so both the customers on the call and for all of us, I think it's going to be an exciting time over the next few years.
Yeah, I agree. It sounds good, although we have somewhat of a challenging environment, but in some ways, of course, also opportunities. Thank you very much for the comments. I'll hand over to Mark because there might be some questions that came in, and then Mark might have some other closing words. Mark?
Thanks very much, Tom, and thank you all the panelists. It's been a fascinating hour. So we are getting close to the time that we said, over 75 minutes, but we can go on if people want to stay for another 15 minutes or so. We can stay open till 5:30 Central European time. One of the questions we had was to everybody, what are your thoughts on the use of blockchain and cryptocurrencies, say in the order to cash area? Can you see that coming?
I'll give you a personal view. I think like with a lot of those emerging technologies, they get tremendously hyped early on, but actually the use cases are very limited. And maybe in 5, 10, 15 years, we'll look and see that blockchain has a role to play, but it's a long, long way from actually contributing anything meaningful to a business. Okay.
Another question we had, for everybody, 95% of GBS and SSCs have performed well over the last 6 months. Any observations why the sector is doing so well? A question to stun the panel.
You mean now talking about like company-owned shared service centers? Yeah, controlled centers.
I would say captives. Yeah, I would think. Yeah.
I mean, in the end, it's super obvious, right? It's gaining efficiencies, right? I mean, the more entities, the more business processes units you include, and then you centralize the behavior, the work, all the labor. Of course, this is successful. There's no doubt about that. And that's why we see this trend for more than 10 years now already.
Yeah, and I mean, if you think about how processes run in shared services, they're typically, as Marco said, standardized, but also to some extent simplified, automated, and in some defined. And most people who work in that space know what their task is. So when we, for example, looked at the results of many clients, then the best process they had was actually closing, because in closing you're working within a specified time frame of typically 3 to 5 days, on average, and everybody knows exactly what they do basically to the hour, right? So running that remotely is not difficult because there is no need really to sit together and discuss physically. So I would say the better defined it is, the easier it is to run those. And I mean, this is not the only answer, but one of the answers, that in many shared services, many processes are fairly defined. You've got a high automation level, and then it runs more or less smoothly.
Mark, I think just to take that question specifically around order to cash or credit management, I think lots of organisations have done well in collecting cash over the summer, but that's because a lot of their customers have been furloughed or demand has been low. I think the challenge comes, let's say, October the 1st, where organisations are no longer furloughed. Customers are now having to come up with the challenge of paying their debts from April, March, and still want to sell. I think, you know, that's the bigger challenge, and there's going to be lots of customers on payment plans. All of that is going to create extra work, whereas perhaps in the last 6 months, organisations have been able to concentrate on being paid from their larger customers and their larger clients, and meaning that the resource in the department has probably been more than it's ever been. And now we're going to the other extreme where customers are going to be phoning up and saying, I need a payment plan, I need assistance, but I still need credit. And I think you've got a perfect storm coming for some order to cash departments.
Yeah, that's a good point. And I was going to bring that up actually as part of my summing up. So thank you for setting me up very nicely there. I absolutely agree. And I've spoken to a lot of people in debt collection and various other areas that the tough times, I think, are still to come. As Brian quite rightly said, there's been like a 6-month moratorium from March until now, and that's going to end. So whether that's furloughs, government support, or even just like kind of an ethical, moral standoff in the last few months to collect debts in various sectors, really from the 1st of October, I think that's going to change and the gloves are going to come off. And as Brian and I have discussed many times, yeah, the perfect storm is about to come. So there'll be more distressed customers will reappear. Brexit is just around the corner, and I think that's going to have an absolutely massive effect on trade and trading relations and so on. There's a lot of economic certainty. There's an election in the USA coming, which is going to be disruptive in some shape or form. And just the cost of borrowing has to go up at some point. You know, all the government support over the last 6 months, at some point we are all collectively going to have to pay for that. You know, whether it's increases in petrol, taxes, you know, point of sale costs will go up, but so will the banks. You know, they cannot go on supporting individuals, businesses forever. In different ways, taxations will go up. So, and that's the perfect storm that's about to come, I believe, and that's so. Taking advantage of the technology that these gentlemen have been describing and the support from the Hackett Group and ourselves and so on, I think is absolutely essential right now, the technology and the talent. As Brian said earlier, a great opportunity for everybody working in order to cash to really show their value to every organization. Okay, I think then we'll probably take that as a good point to close. And I want to thank everybody for joining us today from all over the world, really. A special thanks to the 5 panelists. I think it's been particularly remarkable today that the guys, Brian, Marco, John and Frank, normally by day they are competitors, but they've all come together for the last hour and a half or so to share their knowledge, their expertise and their wisdom. And for Tom, who's put an awful lot of effort in the last 6 weeks or so to bring this together, as indeed as all the panelists. So thank you very much indeed. To everybody who's joined and taken part, thank you so much. It's been our first webinar that we've done, so it's been a great success. So thank you very much. So without further ado, I think we'll wrap it up there. So thanks again. Stay safe, take care, and we'll speak to you soon. So all the very best to you all.
Thanks, Mark. Thanks, Tom.
All the best.
Okay, bye-bye.
Thank you.
Thank you.
Thank you. Bye, guys.